The Australian dollar started the week above 76 cents, but fell about 0.5% over the week, undermined by a stronger US dollar and a slump in oil prices. The Aussie looked well supported on Monday as RBA Governor Lowe argued that Australia's economy is in the strongest position for some time. He pointed to a pickup in global growth and an acceleration in domestic job creation. Market pricing for another RBA rate cut by year end is below 10%, and it does rise to about a 20% chance of a rate hike by July 2018. That's helpful background support for the Aussie. But the Aussie started to lose ground against the US dollar after comments from influential New York Fed President Bill Dudley. He reinforced the case for continuing to raise interest rates. In particular, he warned that if the unemployment rate continued to fall, then it could spark an acceleration in inflation, which would cause the Feds to have to hit the brakes very hard in terms of higher rates. Markets are still somewhat sceptical about the prospects of the Fed hiking rates in the second half of this year, rating it about a 50-50 chance. Nevertheless, Dudley's comments did lend broad support to the US dollar. On the commodity side, iron ore prices have shown some signs of stabilisation. It's not much of a bounce in iron ore prices over the past few days, up from about $53 to $56 a tonne, but at least it stems the heavy losses of recent months. In the commodity space, most attention's been on oil. The Brent crude oil price fell below $45 a barrel for the first time since November. And of course, it was at the end of November that OPEC put together a deal to reduce production and therefore support prices. Australia, of course, is a net importer of crude oil, but it is a net energy exporter, given its heavy exports of liquefied natural gas. The price of LNG is, of course, tied to the oil price. So that seemed to weigh on the Australian dollar somewhat. The Australian dollar fell below $1.04 New Zealand to its weakest point against the Kiwi since January after the Reserve Bank of New Zealand meeting this week. The RBNZ kept the cash rate at 1.75% as expected, but it sounded a little less concerned about Kiwi strength than it had previously, and it didn't provide any fresh suggestion that it might lower interest rates. The RBNZ does look firmly on hold, as does the RBA, but in the meantime, the Aussie is underperforming the Kiwi. Australia's calendar is virtually empty in the week ahead, with no major releases until the first week of July. There's also not a great deal in Asia or Europe, but in the US we will see updates on consumer confidence and in particular on inflation. The Fed's preferred inflation measure has been running well short of target, so there'll be a lot of interest in how the May readings come out. Overall, it's likely to be a relatively subdued week, with the Aussie dollar trading mostly within a 75 to 76 cent range. We'll speak to you next week.